What's going on? What's going on? Let's get this show rolling. Get out to the boys at Discord. All right, man. All right. What's up, my man? How we doing, brother? Got some action going on here this afternoon. That's how ES is doing. Did not play nice with me this morning. Good going at a long time. Yeah, man. Yeah. Yeah, this will be interesting. I don't know that haven't been having a lot of good luck on these afternoon sessions as far as setups go. I'll tell you that much. I'd like to have some more action. It looks like we got it today. Got some volatility coming in. But I'd like to get a little bit more trading done on these. Let me make sure we're running. Cool. That's out. Stream looks good. Let's see. All right, cool, guys. Let's get this thing running. What's up? What's up, guys? Thanks for jumping on. Going to be taking a look at ES here towards the end of the session, looking at S&P futures. This is the 5-minute, 1-minute chart. Going to be looking at it on Top Step X's platform. This is a fresh 50K from Top Step X. Was trading a 150K that I ran up into some nice profit before this morning. Ended up taking 2 losses that I was risking not a massive amount on, but let's get the anchored VWAP. But unfortunately, it brought me back down a little bit. Still obviously in profit on the account, but that is the difficulty with trading these funded challenges. If you are trading, yourself into profit and you end up, for example, like me with about 50% halfway to profit, maybe got $4,500 in profit. If you lose $2,000, like I may or may not have done this morning on the account, you can't run it all the way back down to 150 or you are going to lose the account. So that's the additional challenge, the risk parameters with these funded accounts. But we won't go too far into detail with that. I'll do a quick review. I'll tell you what I was looking at this morning. Actually, let me just look at my chart. I was not trading Top Step X this morning, so I want to see what my markup looks like on this one. Yeah, I think I've got a little bit different zones on my regular trading view, but I can work with this. This is fine. Was pre-market high and low done correctly? Let's take a look. Yeah, well, here was no, this is pre-market high. Oh yeah, we were okay there. Sorry, let me bring this back over. Get the magnet tool. Yeah, 9:30 today, cool. Pre-market high, that's the low of prior day. Pre-market low, yeah, this looks good. I marked it up quickly, so just want to double check on this. But yeah, this morning I was looking at the 1 minute, so I'll just do this for a frame of reference. We had a nice trend up, in the late pre-market after this big news move. Obviously, we had the big news move, and then we had Jerome Powell wreaking havoc on the market. This looked good to me for a buy after we broke pre-market high, trailed back down. We're kind of hovering around this anchored VWAP line, just back down into the pre-market range, and then we saw some nice bullish momentum to the upside. I took a buy somewhere over here, coming right out of this zone, probably just as it was breaking the high after we saw this retest. Failed to go lower and then a push higher above these. That failed. We came down back below this low and really just bounced right off the VWAP line. So that was trade number one. That was a loser for me. Pushed back up after breaking the low. This looked like it was going to continue. I wasn't quick to jump in. Something wasn't looking right for me with this just continuing out. I was a little bit late anyway on it, so I figured I would just sit it out. Back down all the way past the low. I figured, okay, so here was the fake out move. This was all the BS. You know, people are reacting to Jerome Powell now. I think he was kind of getting close to ending around this time, or at least he was coming off. Broke down below, kind of sliced through. We saw, a little bit of support found. Pulled back up here, and I got short somewhere on this, looking at this bouncing off of VWAP line to continue down. And that just did not play out either. Just continued right back up. That move did not follow through to the upside, trailed all the way back down. And if you look where we're at today, here we are back below this low and then above this high. So for me, and I think for a lot of traders, just a really difficult market to trade. When you get this kind of expansion, and what I mean by expansion, I'm slow on these. This trade. Let me just go to my regular trading view. When we get this type of expansion, what I mean by expansion is price action that, like today, maybe forms something like this, and then comes all the way back down below the low, and then comes all the way back up above the high, and then fails and comes all the way back down below the low, and then all the way back up above the high, of course, doing whatever it wants to do in the meantime in between. When you get this type of expanding market where it's not trending and it's not just consolidating and ranging in a tight range, for me, and again, I believe other traders, I think it gets very difficult to trade. The moves just don't follow through. You can get in on a trend and catch the middle of the move, but overall they get a little bit difficult. So I'm kind of defensive right now. I'm not looking to give back any more to the market than I need to. This looks like market's deciding to rally here at the end of the day, coming into the last hour of the day. So this is the biggest move of the day, really. It's looking like, well, I shouldn't say biggest move of the day. That was pretty gnarly. It's looking pretty bullish here coming into the final hour of NYSE session. I don't know how I'm jumping on this one outside of just hopping on board very late. That would have worked out anywhere here. But I don't know that I'm going to get a trade out of this one, guys, honestly. Very happy with my two trades today. Honestly, I'm taking these trades every day of the week. This one, after reflecting on it, a little bit aggressive with not really waiting for a lot of follow through off of this, off this VWAP line after breaking this low. But I wanted to get in on it, after I saw this big move. This one here, very clean to the upside, just, did not respect market structure at all, came back down and validated below the low. So, I'm happy with those trades. They just happen to work out as losses. That's really just how it goes. But not on a heater this week. Dang, man, what do we got? Nothing. Forex Factory. For financial news tomorrow, we're stacked again. Obviously, today we had PPI and Jerome Powell speaking. 8:30 tomorrow, we got CPI, Empire State, retail sales, quite a bit. Nothing at 10, which is kind of nice. Maybe we get through this and we're able to trade just a little bit more of the normalcy of the market without a red folder news event. But yeah, this is just a move all the way up to these next set of highs. Next zone marked off of these highs here. Zone after that is the top of this big wick. That's what I got going on. It's probably some kind of price action on the 5 minute or the 1 minute that I've got it down that far. But yeah, this is just a gnarly push up. Really wouldn't have given me an entry anywhere here. If you're taking it as a break above the VWAP line and pre-market high, maybe a break and retest and a push above, maybe. But after this type of price action, I'm not trading this time frame anyway. This time of day, I should say. But after this type of price action today, I would have been way too hesitant to be jumping in quickly, just basing it off of basic price action and structure, what we're dealing with for that day, the market conditions. I wouldn't have been taking anything. And at this point, it's hopping on the move late, just hoping that it continues, and structuring risk in a really not ideal way. You would be throwing a stop at some arbitrary level, just trying to catch a scalp. Not really how I want to approach this. So we'll wait to see. Maybe this starts to sell off hard. I'm just thinking with this type of market, maybe we see a turn down and this starts to sell off really hard. Maybe we get a pullback and a continuation, but I'm not loving this. I think if anything, I might catch a nice overnight trade out of this if this continues up. As you guys may or might not know, I had a nice sweet spot for swing trading forex pairs. Same approach, same strategy, same market structure, price action, using the same type of identification of zones. You can call them support and resistance, order blocks, paying attention to gaps. People call them fair value gaps, paying attention to, imbalances, that type of a deal in the market. It works on higher time frames the same way it does on lower time frames. There's definitely some adaptations you have to make. There's different risks involved with both, but overall the approach works the same. I've been looking at applying overnight, just swing trading. I call it overnight because I'm in Eastern time, to these top step challenges and looking to catch larger moves, maybe smaller position size. Usually it's a little bit more risk as a whole than any one single trade I'm going to take. It's a swing trade, so I'm only going to get one of them max per day, and I don't take one every day. Been trying to, but if nothing sets up like this crap, I'm not going to get one. But I will look to come to the charts at sometime between 6 and 8 p.m. roughly Eastern Standard Time. After trading is allowed, it's the fresh day on the Top Step account. I can place a trade and let it ride overnight for me, which is Eastern Standard Time, and then look to close it sometime in the pre-market before NYSE session open. And a lot of times you kind of get these corrective moves. If you get a big gap like this up, that's what I'm looking at on this one. I'm thinking, okay, if I don't get anything out of this trade, I don't get to hop on. I'll put you guys on the what I'm going to look for. If this, where's my arrow tool, man? Because I really want it now. Oh, not just that one. Path, where is it? There we go. Okay, blue. That's fine. If we get a continuation here, which maybe this just runs and I'm not going to miss out on it. We get a continuation here without a lot of price trading, back through this this price action here. We form some really strong move to the upside. This is not traded back through. I'll look for some kind of correction back down into the zone, maybe just towards prior day highs. This is really the two previous prior day highs. This was Friday's. This is Monday's, the 13th. Yep, and this is pre-market high down here. I'd look for a sell, something back down. If it consolidates, we get a lot of overlapping price action. And on the higher time frame, there's not really, any kind of imbalance or a strong zone that price is outside of that I would look for a trade back into. I'm not as likely to take an overnight trade like that, but just something that's worked out pretty nicely. I've had some pretty nice wins from that. I'll usually take on, again, a little bit more risk. I'll do it on, one of the accounts that I'm either not worried about blowing or that's, got its full drawdown, daily drawdown, and max drawdown, just so, I'm not going to blow the account. Take on a little bit more risk because you're only going to get one of them. I don't need room to trade 2 or 3 times overnight. And you can capture those larger moves. And sometimes, if you set your profit target really far out, or you just go for a nice risk to reward, you can capture a big move. Wide stop, so you give price room to breathe. A lot of times I like to go pretty far above or below whatever high is there, just in case it wants to crack up above. Take people out. I try to run a pretty wide stop if I do this, and yeah, it's been cool. Hasn't always worked out. Had some losses on it, of course, but again, really the same approach, same strategy, utilizing market structure and price action. Really stopped just a tick away from my zone. Here's the magic of zones. Not really. It's just a discretionary zone. But stopped right before we got there. We're coming back down towards high of day. Looking at, this is a fun tool to look at. Again, I don't use this as an indicator or anything. It's just something new from Top Step. Obviously, it's only been available for a week. But it gives you the sentiment, what the traders on Top Step X or Top Step or trading, who's short, what percent long, and their prices, and if they're making money or if they're losing money. So you can see in the S&P, which I'm looking at here, almost 70% of Top Step traders are short. You can see the short guys today are let's see, average price 52.63. Usually, from what I've seen, is not too far off. Oh wow, they got entries way down here. They were selling on the way up. Usually, it's not too far off of wherever price is trading. Long's average price 52.60. Just an interesting tool to look at. Obviously, they're pushing it. How helpful is it going to be? For me, like when I start to see stuff, when the market swings heavily one way or the other, like everybody's getting short, it's usually about time to get long. Like I've noticed that, the market, when it gets stacked one way too far, like it was doing right here, this might be an indication that, obviously guys are just selling into this overextension. We're approaching this level here to the left. Next set of highs that we have marked off, coming into this level right here. You can see prices trading right here. We kind of just tapped this area where all these wicks have come up. Somewhat of a level there, tested as support a couple times over here. Guys are getting short on it, but I'm not sold just yet on anything. What's up? Use supply and demand with the 200 EMA. I go with the trend of the 200 EMA. Do I think VWAP is better? Yeah, man, I do like VWAP better than moving averages. I felt moving averages were okay, starting out just kind of as a directional trend type of deal. A lot of guys run 2 or 3 on their charts. I used to do that when I was working full time, and I wanted to just be able to look at my phone quickly and see what the trend of the market was. So I'd have shorter time frame, longer time frame EMAs. To me, it just starts to cloud the chart up pretty poorly. I don't like to do that. The VWAP is pretty nice. It gives you a little bit more frame of reference of what's going on with the volume, where the trading is based on that session. The anchored VWAP does the same thing. You just get to decide where to anchor it to. You can move it throughout the day so it doesn't get as lagging. You can do it within ranges. You can do it at the bottom of moves, that type of deal. But I like VWAP a lot better. I don't really use it for trends so much. Obviously, if it's pointing up and prices above it, your prices are going up. I use it more as a support and resistance style of like a dynamic zone, where if price is going to blow through it, maybe like today, I thought it was going to come back up, test it as resistance, and then continue down. You can use that as some kind of not an indicator, but just a zone, more dynamic zone. I also know just everybody that I see or talk to or watch in the futures market is using the VWAP. So I'm a believer that these things start to have a little bit of a self-fulfilling prophecy. I mean, even the big guys, the professional guys, people that were, it's kind of like, if everyone's paying attention to it, I should probably be paying attention to it just a little bit. So I do like VWAP. I like the way it reacts. I see a lot of times where price just comes down and touches it. Look at here. If you were just a VWAP trader this morning, you would have done really nice on a buy here after a pullback, and maybe you would have taken it again right here and been stopped out. But this would have been a gnarly move. But yeah, I do like VWAP. I like it over a moving average. In the futures market, volume is important. It's reliable, so I like it as a volume tool for sure. But what's up, guys? If you're just hopping on, welcome. Make sure you hop in the free Discord. If you get value out of it, someone said it yesterday, there was 4 likes, and then someone was saying, man, there's 12 people on here and only 4 people liked it, and then everybody liked it. So yeah, feel free to like the stream, subscribe if you find it valuable. I don't like to ask anybody for anything that I'm not going to provide an enormous amount of hands-on help or something super specific. So if you don't find it valuable, feel free, don't like it. If you do, help me out, like it. And hop in the free Discord, man. My goal with that Discord is to build the best free futures trading Discord community of traders, live trading like this for free. educational sessions, answering questions, sharing charts, market analysis every day where I'm calling out stuff like we had this morning. If you were in the Discord, I warned everybody about this 8:30 time frame, the financial news that we had going on. Talked about Forex Factory, talked about this PPI. We talked about how we might handle trading through it or avoiding trading it. Talked about the Powell speech again, called it out multiple times. So, just a positive community that I'm working on building, growing fast too, man. We got like 15, 20 people a day joining, which is really sweet. I appreciate that. Let's get the count. It was 120 or something like that. Yesterday, 118. It's at 132. So appreciate you guys jumping in. If you're here and you're not in Discord, hop in, man. Definitely hop in. VWAP is good, but it's better with Heikin-Ashi candles because it's clear. Yeah, I mean, whatever floats your boat, man. I'm not a big fan of Heikin-Ashi or anything other than TradingView's footprint chart on the side. It's definitely a cleaner, smoothed out looking chart. It just displays the data in a different way, and I like to see this real clear cut high, low, and close, open and close of each candle in a traditional Japanese candlestick chart. But you could use Heikin-Ashi. I think maybe with swing trading you'd have even a little bit better luck. But if you're trading trend, it can be easier on the eyes, a little bit less stressful to stay into trades. I haven't ever used it or traded with it. I've put it on my chart a couple times just to watch and pay attention to it. Obviously I want to know what's out there and experiment with all the different tools, be aware of what they are. But I like to have the real candlesticks on here. But Heikin-Ashi's real too, just displayed in a little bit different way. So we pushed up here. I'm going to watch the 5 minute on this. I don't want to get too jumpy on the 1 minute. I'll check it right now, but yeah, like again, I don't think I'm going to get one out of this. I hate to run these lives and not take trades. I like to give you guys some action. I like to display the execution of my trading. If I'm not trading with you, I'm going to tell you when I'm doing good and when I'm telling you when I'm not. Like if you're in the chat today, I explained 2 losses, explained in detail the times and what I was looking at here. But I'd like to get some trades in the afternoon. Market just hasn't presented me with the opportunity. It's not for a lack of wanting to do so or not having a fresh account loaded up, ready to go like I got here. I just don't have a setup. This isn't terrible for a continuation move right now. We pushed up. We kind of pulled back. We pulled back down, not kind of. We got really close to testing the prior day high and Friday's high that we got right here, and now we're continuing to push up. So a buy here is not looking terrible. I'm not going to take it. It's just not. It's just not exactly what I need from a setup. Something along those lines would be it. You could go with a really tight stop loss and target, maybe a 2-to-1, something like that. I wouldn't want to be selling into this. You could see the S&P flipped pretty quickly. Everybody that was getting short over here has either been taken out or flipped long. But something like that, I'll paper trade it. I'm not in this trade. I'm just showing you guys what I would be potentially looking at. But this is just so much wide open price action that structuring your risk this way, I'm just using this small pullback here. Price can really pull back down if it wanted to, come down, test this level, which, has all the freedom in the world to do, and then continue up and, not really break structure. When I'm taking a trade like down here this morning, I like to have really clear, repetitive, structure here. Look at this really clear trend. Unfortunately failed when I got in, but this makes it very clean. If price is going to continue up, it really shouldn't be coming back down and breaking this set of lows. We got nice breaks and retests, higher highs getting put in, higher lows getting put in, consecutive, makes it very clean. If price is selling off here and I just want to get short, unless I have some price action to trade off of, it can be pretty hard to do so. So, structuring risk is important to me and should be important to everybody trading. Yes, looks like it wants to push. Formed a ton of stacked imbalances on the 1 minute on the way up. Came back down, tapped into this one right here. This is TradingView's footprint chart. The beta new footprint chart. You got to have a premium membership to use this. Acts as order flow tool. A lot of different things you can see on it. There's some debate, so I'll preface it with I don't know if it's real data or not real data. I don't know if it's accurate or not accurate, but it's been interesting to watch. It creates these stacked imbalances where there's an imbalance of buyer and sellers. It throws a zone out to the extends to the right of the chart, and you can view these as potential zones to pay attention to. I find that price reacts very interestingly to these zones. So I've been utilizing it in my trading. I've been paying attention to it on the side and kind of using it as a final look if I'm looking at taking a trade. If you zoom in really close, you can see delta on each candle as well. I think that's helpful. But I'm going to get rid of this so I don't confuse anybody. We'll hang out and watch. If you guys got questions, oh, what's up? We got some people on here, man. Appreciate you being here. Hop in the free Discord. If you're not already, Discord's free. Live trading, live market analysis every day. Talking about news, warning you guys about moves like this so you don't get caught off guard. Multiple times, tagged everybody about that. Giveaways. I gave away 6 50K Top Step accounts yesterday. Challenges. It was awesome. So much support, man. It was really cool. If any of you guys are on here, the level of community support that's growing in that Discord is just super cool. I never thought I would see that with a group of online strangers, but man, it is cool. A lot of guys supporting each other. Everybody hyped up on what I'm doing. It's really cool. Had some guys tell me, man, I don't care about the giveaway. I'm just here. Appreciate all the help. So I was like, damn, man. I figure people are gonna take and just not everybody's so appreciative or grateful or that type of deal. And I don't expect people to be sometimes on the front end, but it was really cool to see that. It was nice. Some people said some really nice stuff, so I appreciate you guys. I really do. If you're not in here, I highly recommend you hop in now, man. Join the community, ask questions, talk to each other, ask me questions, engage. Don't feel like you can't talk or everybody's best friends and you're the new guy. We got tons of people joining every day. I want it to be a spot where everybody respects each other and themselves and gets to talk. That's the game plan. But please hop in, ask me questions, get some help with your trading for free. That's the deal. If you want some more hands-on help, I got a way we could talk about that still for free. We could talk for 30 minutes, hop on the charts, go through your trading, decide if you're a good fit for a more hands-on program. But I give you guys everything for free. I come on here, I talk, I'm going to answer any questions. I'm not really not gatekeeping anything from you here. As far as my trading, my approach, my risk management, my psychology, talked in detail yesterday about journaling, the way that I journal, different ways that you can journal, benefits, so. But appreciate you guys being here, man. And again, someone yesterday was making a joke. There was a bunch of people on and not a lot of likes. If you like the video, feel free to like it. Feel free to subscribe. If not, don't worry about it. No pressure, man. I'm not going to beg anybody for anything. Yeah, a little bit of a hesitation here after this push up and pull back. Not a ton of follow through. We got to close above this candle high. I'm looking at this 5-minute close above here. That was an indication that this looked like it really wanted to continue. I was just expecting to be missing this move up. We're not really getting that. We got some hesitation here. We've got a little bit of consolidation. We've got buyers and sellers trying to take this thing one way or the other. So it's interesting to watch this right now. Let's take a look at the other charts. Let's look at our boy NASDAQ. NASDAQ. Get rid of all the drawings on NASDAQ. Let's get a 930 open. I like this for a frame of reference. Boom. Yeah, similar price action. Similar structure, I should say, on NASDAQ. That's typical. pushing up. It was a lot choppier yesterday. I felt bad for anybody that was trading NASDAQ yesterday. And then let's look at Dow, which has really been in its own world lately, in my opinion. From what I've noticed, paying attention to ES, because I've had the most experience on NASDAQ and US 30, Dow. I was trading US 30 in the CFD market for a long period of time. Dow, now paying attention to ES, which seems to have the very, very similar structure and structure, I should say, to NASDAQ. Price action is different. Volatility is very, very different. The way that it trends is different. But Dow just seems to be in its own world. I mean, there's, it was ripping last week when, the other two were not at all. Sometimes it just sells off aggressively. The open is often very different. Right into pre-market to the 9:30 open is often a very different move. So you could certainly trade it. I mean, same style and approach will work. I just think if you're trading Dow, you should probably just be paying attention to the Dow. Even the structure here is not as bad today, but pulled quite a bit further down. Really just trailed down and then hooked back up. Slow creep up here. Yeah, again, I don't know that I'm going to get one. So, I mean, if you guys got questions, please ask them in the chat. I am happy to answer questions. I'm happy to talk about any specific trading topic. We talked about risk management with prop firm accounts. Excuse me, man. My voice is just messing with me. Hopefully it's all cleared up tomorrow. We talked about journaling in detail yesterday. I talked about going back to manually journaling with a pen and paper that I got right here, man. I won't give you all my journal from today, but filled up a couple pieces of that paper in full, man. Journaling pre-market, journaling each trade in detail, reflecting on each one, and I'll do so at the end of the day. But if you guys got questions, man, please ask. If you got a topic, something specific that you want me to talk about, I'm happy to do so. Otherwise, I'm going to chill, watch this chart, and if something comes to mind, I'll yap about it. But again, hop in the free Discord, giving away accounts, discounts. If you're interested in Top Step, I don't care if you. I don't even think it helps if you click on my link. It's just a Top Step X account, but they've got this deal running until next Monday, the 20th. Code is TopStepX, all lowercase, no spaces, and you can get a $19 50K TopStepX Combine account. You get started for $19. I say started because if you pass, there's an activation fee. If you fail it, you're up against resetting it or rebilling. But pretty sweet, man. Sweetest deal that I've ever seen from them, and they're giving out resets like candy. I had a free, I've gotten 3 from them now in only a couple. I think I got 3 from them now, just fire drills and bell to bell. But yeah, man, on their site, they give out free resets worth $150 if you're trading the 150K account. That's how much it is to reset it. It's worth $50 if you had a regular Top Step account, and then the Top Step X, it rebills at 19, which is really, really sweet. I don't know if it resets at 50 though. Haven't checked that out yet. But yeah, pretty sweet if you want to give trading a prop account a shot. If we pull back down through this and continue down below these lows, start closing below, I think a move back down at least towards prior high for the day. This area right here where it found some resistance, trying to break this is very likely. A short from right up here doesn't look terrible, honestly, but again, I'm not convinced with just the bullish, overall bullish structure, the continuation that this move has had, this really bullish move back up when we go way zoomed out on the daily. Look at these green candles, man. Just a really tightly trending push up, even as we've had some kind of consolidating and trying to be down days. We don't have a lot of deep pullbacks, even like this move. So this just looks like it wants to continue. Next area that I would be looking at if I was marking larger zones for higher time frames would be this area right here, where it was tested as support And, you know, as resistance here, we're kind of pushing above that right now. So this continues. I think we got room to the upside. Again, maybe overnight we see some kind of a correction on the lower time frames before continuation up. But I'm not liking sells, man. The sells have not worked well for me at all, even on lower time frames. So being a perma bull, as they say, someone was talking about that dude, Dakota. That's always on the Top Step lives. He seems like he's pretty serious trader. He's like loves only buys. I had it on in the background today. He actually took some losses. He was taking sells and it didn't work out too good for him. I think he took a buy first that failed. He took a sell that won, and then they all were getting into another sell that failed. But I leave that on in the background. Try to catch fire drills, honestly. Try to catch the free accounts. See what we got, man. Yeah, you guys are quiet in the chat, man. If you got questions, ask away. You got a topic you want me to talk about? Let me know. Suggest it. If it's something that I don't feel like talking about or I don't think is useful, I'll let you know in a nice way. But if you're on, I appreciate you being on, man. Hop in the free Discord. Giving away Top Step accounts, giving away as much free info to help you become a better trader as I possibly can. Showing you the good, the bad. Last 2 days have not been super pretty, but that's just the nature of it. I'll show it to you guys either live or I'll recap it with you. I'll talk about the losses. That's just part of trading. I think it's important to display it. If it gets pretty boring if you're just watching someone back and forth. So of course I have the highlight reels. We hype everybody up on the wins. We show you the opportunity. But if you're not seeing the real losses that are involved with trading, that you're really nice break and retest, following the trend and the VWAP and utilizing all your zones, you don't show that just doesn't work out all the time. Sometimes price just doesn't give a shit about any of the zones or anything you have. It does not respect any of the normalcies that come into technical analysis, and it just does something completely different. Maybe because Jerome Powell decided to say something, answer a question a certain way, or just that's what the market decided to do that day. You got to realize that. You got to go understand, that's the cost of doing business. I look at it as an expense. There's normal losses like we talked about with the equity curve, plugging in your win rate, your risk to reward, and understanding that. So I'll show you guys the not so fun side of trading as well. And if that discourages you from following along, or you want to just see somebody that only has wins and shows you Lambos and just a bunch of wealth, probably in the wrong place for it. I'll show you the real stuff, man. I'll show you the good, because there's definitely some good, man. Some hot win streaks. Since I've started this, I had some gnarly win streaks, man. Like week and a half, I took trades every day. It was just win, 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 win. Some were partials and then stop at break even, but everything was a profitable trade. And I had quite a few losing days in a row. That's just the way it goes. Even distribution. Yes, looks like it's finding some hesitation. I think it's still going to go. I think it's going to run. Mark Douglas's words. There's a random distribution between wins and losses for any given set of variables that define an edge. Not reading that off of anything. It just resonates with me. I had to read that a bunch of times and then memorize it, because consecutive wins and consecutive losses would really start to mess with me. That's where I struggled the most, I think, psychologically, mindset. Everything's going good. You start feeling too good. You start getting overconfident. Everything's going bad. You start thinking, I don't know what I'm doing. This doesn't work. I'm a bad trader. What was wrong with my analysis today? It's just how it works, man. Your win rate is only going to give you that win rate. And the way that those wins and losses are distributed is random. It can be many consecutive wins and many consecutive losses, unless you're operating with a super high win rate. If you are, and you have a really positive risk reward, let me know. I want to meet you, and we could talk about that. Chat took sale, loss, recovered. Oh, there you go. Nice. Mario was what's up, Mario? Mario was watching Dakota. What time frame do you enter from, and about how much confluence do you look for? Yeah, man. Usually I'm on either the 1 minute or the 5 minute. I've been really trying to zoom my way out to the 5 minute for a number of reasons to slow myself down. I can utilize the 5 minute a little bit better on the on S&P. It's a little bit less volatile. I can size down on NASDAQ. I just couldn't trade 5 minute structure. My stop losses would have had to been 150 ticks, and I would have just been having to try to capture a larger move, and the risk involved with it was just too high on the mini. So S&P has been better, but usually it's the 1 minute or the 5 minute. You could trade from either. The data is the same. It's just displayed in a little bit different of a way. If I'm trading the 1 minute, I am looking at a little bit larger structure. I'm not going to get a stop loss just below the candle. I'm not going to try not to. And then the amount of confluence, I know that's a term that's used a lot in trading. I think it can be interpreted in a couple of different ways. But the setup that I like to see is I do my pre-market analysis, right? And that kind of gives me a frame of reference to start working off of. And some of this can be a little bit abstract, but again, discretionary trading. So, you could try to understand this within me utilizing my discretion and my intuition. But I do my pre-market analysis. I mark my zones. I look at the trend over a number of time frames, higher time frames. I mark my pre-market highs, my lows. I look what happened yesterday, where price is within that. I take a look at what the pre-market trend is. Again, I'm mentioning all this because this all factors into how I'm going to take that first trade. I watch the market open. For example, today, after this move here, market opened up with a little bit of an indecision and then broke above pre-market high. Nice and bullish. Came back down for a nice break and retest, right? So I've got trend on my side here. We're above this VWAP by a nice shot. The anchored VWAP is looking nice and bullish too. I'm above pre-market high. We're headed towards the highs where we have a level of structure that I'm able to target, right? I like to have some idea if I have a level of structure that was right here, maybe it's not such a good trade. Sure, it's likely to go up there and tap it, but that doesn't provide me a good risk structure. So you could say that that's a confluence, but I'm looking at level of structure that I might want to target. I had a good way to structure risk with this trade with a stop loss below this level of price action. And I'm able to get in with the momentum of the trade. I like to see my kind of an ideal kind of setup is just really like that. With the trend breaking out of a level that I've had marked on my chart before, a break and retest of that level that gives me a way to structure risk, and then not just a retest, but then another continuation, breaking that high again in the direction so I could trade with the momentum, with the volume. That's really the confluences that I start to look for. Along with all that, there's a level of intuition and discretion that comes in where I just say, I've spent hours and hours and days and days and days of watching this stuff on the chart. And there's some times where I say, you know what? I just don't think so today. This trade, some things are lining up, but it's just not feeling right. Something, my intuition, my experience is telling me, maybe I've seen this before, maybe I've been in a similar situation, and this one, is not it for me. That's discretionary trading. It's not rules-based. It's discretionary. I approach it with a lot of consistency in the way that I approach the market, my approach to trading, what I like to see for an entry, how I structure my trades, how I manage them. But there is a level of discretion that's applied. I'm not entering at some exact objective level that can be defined on everybody's chart. But yeah, the more that I could see lining up, the better. Again, I take into account the volume, the volatility, what the market's doing that day. If there's financial news events that are occurring before, after, where we are in that cycle of the week, like we were today. I was recognizing that Jerome Powell was speaking. The market was really just, even after this big wick down, just had this is the discretion, the intuition that didn't play in my favor today. Wanted to push up. It looked like it wanted to continue moving up. It was, even if there were people selling here, they were getting beat out. The quick pullbacks were very short, and it looked like momentum and volume was, on the bullish side. So that was the move until this, and that's the flexibility to to flip and say, okay, I'm going to ride the market, but just did not work Did not work this time, and it doesn't work every time. That's part of it. So yeah, man. 1 minute, 5 minute. That's the confluences that I look for. If you were going to call them confluences, there's other things I take a look at. Different times. I'll look at that trading view volume footprint chart. I'm not always staring at it. I'm not always staring at the VWAP. For the most part, it's market structure. Trend, where the lows, the highs are, the imbalances within price, the gaps within price, and then price action itself. How is that price action forming? Does it, is there momentum behind it? The size of the candles, the way the candles are forming. Is there volume behind it? Maybe utilizing the volume footprint chart, utilizing traditional volume. Again, this chart is very stripped down. I got VWAP and anchor VWAP on here. That's it. I don't even know what this is. I'll have to find out from TradingView. Yeah, man, no problem. If you guys got other questions, feel free to ask them, man. I don't think I'm getting a trade out of this one. I really don't. I think this is going to play nicely for an overnight short, depending on how the market consolidates and the price action once we start to see it open back up. At least like trading open back up, and when I'm allowed to trade with a Top Step account, if I'm using a Top Step account. I'll be looking at evening time for me in EST, 6, 7, 8, maybe 9 o'clock p.m. Eastern. I'll look to enter something that I'm planning on holding overnight. I'm looking short only for, to fill this area. Obviously, if we're basing off a higher time frame, this thing looks like it wants to continue going. So we'll see. And if it's running, I'm not just going to try to fight that trend. But yeah, man, if you're still in here, and you're not in Discord, I don't know what you're doing, man. Hop in the free Discord. Free live trading, market analysis, educational sessions, all that good stuff. Accounts, gave away 6 Top Step accounts in the free Discord for free, no purchase necessary. What sessions do you trade? I trade NYSE open. I like to trade the 9:30 a.m. open. I get on the charts a little bit before then. I mark my pre-market, my charts up during pre-market. Typically don't take trades in the pre-market time frame. Wait for the market to open. Sometimes I get involved pretty quickly. On ES, it's a lot less volatile of an open, so I've been more inclined. I had more of a rule on NASDAQ that anything in the first 5 to 10 minutes is just like wild west, man. It's not going to follow any type of a real structure or the price action. It's just going to be wild. So I really held off until about 9:40, 9:45 before I like to get involved at the earliest. On ES, maybe it's a little bit earlier, and I try to be done before that 11:45, 12 p.m. time frame. I'm usually done a little bit earlier. I get my couple trades in, like today. They work out, they don't work out, that's it. Volume, volatility traditionally dies off around that New York lunch. That's what they call it. It's the 12 p.m. Eastern to 1 p.m. Eastern, right around there. Volatility, volume dies down. Markets tend to trend. Maybe you get a little bit of a just abnormal price action, some reversal, some correction, something. But I like to structure my day around that to just back off. There's also only so much time you could focus, in my opinion, on a 1 minute or 5 minute chart and make really good trading decisions. And then I come back for the afternoon. This time frame, power hour, last hour of trading for NYSE session, 3 p.m. to 4 p.m. Eastern. Market ticks up. We had a big move that started much earlier. Here's 2 o'clock. But you get additional data in the stock market that comes in for orders. You get a lot of trading that just comes in at the end of the day, and volume and volatility is what we need for some nice moves. So I will say over the last week and a half of trading days, I really haven't been loving the afternoon session. I might make some adjustments for when I do some of these lives just to get you guys some more action. But the market's either done something so wild or the move hasn't really been occurring for me in the afternoon session. Just hasn't been setting up the way that I need to take an entry, as this is just continuing up. So we'll see, because I've been coming on and just, I could tell looking at the chart that I'm likely not going to get a trade out of it. But yeah, those are my that's my time frames. And then overnight, every once in a while, I've been been testing, really, I'll say, some overnight swing trading on ES or NQ. No pressure, man. No pressure. Yeah, and if you've been following along, I've been trying to get a little bit more conservative with these evals. I came in super aggressive, trying to be a little bit more selective. Whatever setup comes with the setup comes, but from an overall standpoint, a little bit more conservative on the risk management side as well. But yeah, this move is just not backing off. Really not backing off. Look at the 15-minute. We're up into that zone, looking like we're going to break above this area, come up towards testing this wick. Looking very bullish. Buy out of this area would have been fine. Again, for me, explained earlier why this just wasn't enough, wasn't a setup for me. Not really a good way to structure risk. At very best, I would have been waiting for this to be broken, and at that point, again, I'm structuring risk just down below this level with a stop loss and targeting a much higher move. But this looks like it's going to run. Obviously, it's continued to do so. We're at April 12 highs. Yeah, man. I feel you. This big run up on the higher time frame is just not backing off. It looked like, if we do a higher time frame analysis, let's go with the 1 hour. If we zoom all the way back, it looked like that this really long-winded bull run was coming to an end once we started this downtrend structure here. First it looked like a pullback. Everybody was saying the same thing, and then here comes the fear, right? Like, oh man, this is not backing off. We're getting, we're really forming some higher time frame downtrend structure over a number of days. And then this looked like just a short-lived pullback, like one of these. It was going to continue down. Now we've got the rally going, and it's really only gotten stronger from what I've seen right here. Just a lack of pullbacks, a lack of price turning down. We definitely had some consolidation here, some resistance here, but here we are putting in the high. So this does not look like it's over yet by any means. There's no reason to be looking from a higher time frame perspective to get short. Not that we're holding trades for more than 1 day, but this looks like it wants to continue. Obviously, we got the highs that we're going to approach pretty quickly if it does continue, and that's an important level to be paying attention to. But it has not backed off. Has not backed off. And the level that it's pushing above right now is really like, this area that was used as support. We're above these highs over here. If you go back and just kind of, eyeball some zones, some areas that price consolidated at, it's pushing above, man. Yeah, I'll be honest with you. Like, looking at that, an overnight short is it's kind of not dangerous, but it doesn't feel super easy to take. Sometimes that's the good trade, the ones that's not so easy to take. But I would really be only looking at a pullback down to clear up some of this price action, some of the imbalances that stacked imbalances that price would have left on this big impulsive move up. Let's look at the 5-minute, see if this loads. No stacked imbalances on the 5-minute. That's why I like the 1 minute on this one. It shows a little bit more, less reliable, I guess you could say. But yeah, we'll have to see, man. We'll have to see. What else you got, chat? give me something to talk about, man. Trading topic, trading discussion. Um, I've been going over a lot, so I didn't have anything majorly prepared on here to yap about. So if you guys got something, let me know, man. If you're on here, I appreciate you being here. Thank you for being here. Hop in the free Telegram. Hop in the free Discord. Telegram's dead. If you're still in the Telegram, you can close that out now. There's still like 350 people in there. You don't have to follow that anymore. I just keep posting the same thing in there. Hop in the free Discord. Not an enormous amount of time, man. I think you mentioned came from the CFD world, you too. Yeah, man. So I've been trading Forex for quite a while. That was my, when I got real serious about trading. First it was stocks and crypto. Then it came over to Forex. I'm in the U.S., so was somewhat limited on the brokers, the leverage. If I was going to use a U.S. regulated Forex broker, you may or may not know, but the rules, the regulations are pretty tight. We don't get any of the fun stuff, as I like to say. No high leverage, no 500 to 1, no 100 to 1, 50 to 1 at best, only on a few pairs, but maybe you get 20 to 1 on most stuff. So no high leverage, spreads that are not competitive with anything else you see in an unregulated broker or regulated in other countries. High commissions and fees, high swaps, all that stuff, made for a not so great experience. Your money's safe, and they would pay you an APR if you were trading with a decent amount of money. For me, I was with them in live accounts, but I wanted to trade US 30, NAS 100. I saw a lot of guys trading that. I wanted to trade the US indices. I was interested in being able to trade that. That was available to me through Forex prop firms. You can guess how that went, right? Like, I didn't have a great experience with Forex prop firms, especially being in the US, did I? No, I did not. I got burned a million times. So that led me to futures, which has been, and really only recently. We're talking, been in the markets for quite a number of years. This is probably only a couple months into futures, man. Few months into futures. Messing with futures prop firms and different platforms. From my perspective, the trading's the same, the charts are the same, the approaches, the strategies that you use are all going to be the same. The execution's slightly different, the structuring of risk, the sizing, contracts versus lots, ticks versus pips, understanding, some of the intricacies of the futures market, I think, is important. Not incredibly difficult, man, to make the swap. I mean, if you're trading and you've having a lot of knowledge in the CFD market and Forex, you're trading the same chart. You're trading the same instruments, really. The US 30 is the Dow. NAS 100 is NQ. It's the same thing, the same chart. It's just much better in the futures market, in my opinion. The data is reliable. It's coming from one centralized, regulated, piece. The brokers aren't the ones that are providing the data. Everybody's trading the same chart. The volume's very reliable. Technically no spreads. It's just a bid and ask price. It's typically one tick. Super aggressive on commissions and fees, and then the prop firms are really awesome, man. From what I've seen so far, they're legitimate, at least. They're cheaper. They're much harder to pass. Much stricter drawdown rules, but it seems like people get paid from them. It seems like they're not just going to go away for U.S. traders one day, or they're not just going to make up a consistency rule that says Zach can't get paid his few $1,000s in profit that he's owed. So that's the experience so far with futures. It's been cool. I think if you're a U.S. trader, it makes triple the sense. I think the CFD market and Forex market is much more advantageous in other countries where the rules and regulations aren't so strict. That's what I would say. Yeah, man. Came from the CFD world, yeah. Is there a conversion? The heart, for some reason, messing up on this chat. I don't know why they do that. I've been confused with pips and points. Is there a conversion between pips and points? So here's how it goes. Just briefly, man. Let's go to a regular trading view chart. This is basic, so I don't want to bore anybody, but I'm taking questions. So, if you're bored, sorry. Let's say we're on a any new to CFDs. Okay, well, we're going to talk about futures right now. CFDs are typically done in pips or points, right? Futures, every futures chart, the smallest price movement in any direction is going to be one tick. The value and the amount that each tick is worth, the price movement would be the amount, and the value, the dollar amount is going to vary by what contract you're on. So, Vivian, what are you typically trading? Let's go to the chart that you were trading. Do you trade NASDAQ? Do you trade in the CFD market? Do you trade NAS 100? Do you trade US 500? Do you trade US 30? What are you typically trading? And we'll go to that chart because I'll start on NAS. Okay, cool. So this is the NASDAQ chart. Don't mind the markings. I think a lot of this is old. Maybe I updated today, but I can't remember if I did. Looks like I did. So the NASDAQ chart, the NAS 100 CFD, is going to be NQM. This is the NASDAQ mini. So for right now, it's called the mini NASDAQ. This is the main chart that guys will trade. It's a $5 contract. That's what people call it, because the value of one tick is $5. A tick up is $5. A tick down is $5. You're going to make or lose it depending on the direction you place a trade. Each tick in the NASDAQ is a quarter of a point. You can see how this is trading over here, right? 0.25, 0.5, it's a quarter of a point. So there's 4 ticks per whole point. Each tick is worth $5. So, for example, let's say we want to take a long, right? And we want to have a stop loss down below here, and we want to have a 2-to-1 profit target. We can use TradingView, actually. It's very nice and easy to calculate this. Our stop loss for one contract would be 100 ticks, right? Can I make this 100? So my OCD feels good. There we go. Our stop loss is 100 ticks, right? 100 ticks at $5 per tick is $500 of risk. One contract. If we put 2 contracts on, what would happen? It'd be $1,000, right? Perfect. Just like that. The difficulty for some people trading the mini is that it's a little bit difficult to structure risk because the minimum you could trade is 1 contract at a time. You can't put 0.5, okay? 1 contract whole at a time. It's less flexible in that perspective when you compare it to the CFD market. The other alternative here is you could trade the micro, where each tick is worth significantly less. Let's just focus on minis for a moment so we can see how it differs across instruments. Let's say you wanted to trade the ES, S&P 500. Similar structure in that it trades, each tick is a quarter of a point, 4 ticks to 1 whole point, 1 whole number, right? A lot less volatility when you look at the dollar amount that it trades at. But the difference here is each tick is worth $12.50. Just for example, so you can see that. 1 contract, 1 tick stop loss, each tick is $12.50. So in this example here, let's say we're taking a buy and we want a 20 tick stop loss. Our risk that we put on here is $250. Same thing, you increase contracts, you can only use 1 whole contract size. Is this all making sense, man? Let me know. Yes, okay, cool. That's essentially it. It's not super hard to understand. Same thing. There's micros available for each one of these products, which just reduces the tick size, the tick value, dollar amount. I don't know what each micro is, but it reduces it by a long shot. So if you're trading with a really small live account, you don't want to take on this amount of risk. Maybe you're trading with a prop account of 50K and you want to size way down. You can trade micros instead of minis. The Dow is a very similar deal. Here's the main difference in the Dow. Each tick is 1 whole point. There's no quarter of a point. Each tick is $5. So if we were trading the Dow, position tool, let's say for this example, we have a 50 tick stop loss, right? Here's the 50 ticks. You could even see here the points equal the ticks. If we go over here, back to our ES example, you could see this is 5 points, right? From my entry to my stop loss, it's 20 ticks. Dow, each point is 1 tick. It's pretty self-explanatory because you can see it on the chart. It happens to be $5 contract for the Dow as well. If we're trading 100 tick stop loss, it's $500. Hopefully this makes sense, man. There's some other differences within the futures market coming from CFDs. I won't go through every single one of them, but that's an important one when it comes to sizing. It's important to know you can only trade whole contracts. You can only open and close, minimum 1 contract at a time. If you scale in and out of positions, that's important to know. So sizing can become a little bit different. It's, again, a little bit less flexible depending on the broker that you're using. The CFD market, you might have had a lot more flexibility than that. But yeah, that's the basics here, brother. If you got any more questions on that, Vivian, let me know, man. It was a good question. Something that's difficult. That's the hardest piece to, no pressure, man. That's the hardest piece to understand. My recommendation would be obviously demo trading, practicing on demo, placing trades, understanding the sizing, understanding scaling in and out of a position with 1 whole contract at a time, how you're going to place stop losses, if you're going to use market orders, limit orders, how you're going to enter and exit the market. Just watch it, for a little bit, because there's differences. But in my opinion, most of the stuff, you're going to have an advantage in the futures market from what I've seen, most of the stuff. If you're trading the U.S. indices in the CFD market. I'm a beginner. What in CFD, what should I trade? First, probably don't trade CFDs. I'm a big futures guy now. No, it's totally up to you, man. Like, if you said, hey, I have no idea and just give me a recommendation, probably ES, just the S&P, US 500, I think it's usually called in the CFD market. I wasn't trading ES, S&P in the CFD market, but probably S&P over Dow and NASDAQ, just based on the volatility. It's just not as violent of movements, slower moving. So I think that can help in a beginner, especially on lower time frames. But it's a big question to answer, man. So it really is just totally up to you, what you want to trade, whatever you're interested in, the market that you want to watch. I'd go with something that's a little bit less volatile. I think that just helps for a beginner. It's like playing, the video game on expert mode when you're trading the NASDAQ on the 1 minute time frame versus, a higher time frame and a slower moving market or instrument. So, couple good questions, man. What else we got? We're doing questions. This is Q&A. I'm not taking anything. I don't see anything that I'm comfortable with. If you hopped on, I see we got a bunch more people on. Thank you for jumping on. If you feel like liking the stream, go right ahead. If you feel like subscribing, go right ahead. If you feel like hopping in the free Telegram where you can get the schedule for live trading, live educational sessions, market insights every day, giving away prop accounts. I'm going to say it again, man, only because that's what happened. I named 6 guys to get free 50K prop account challenges yesterday. I'm happy about that. And half of them were so awesome and appreciative. They weren't not half, but they weren't even asking for the accounts, man. They were saying they're just here for the education and the help and the community. And that was really cool. We got a really, really awesome community we're building. I'm super proud of that. Internet strangers coming together to help each other out. It's really cool to see. So, questions, man. Ask questions, please, in the chat, guys. Give me something to talk about. I'm watching the market for a long time now, but I'm scared to place a trade. Man, give me more background than this. What are you watching? What market are you trading? What instrument? What time frame are you trading on? How long have you been trading? How long have you been watching the markets? And what time frame are you going to trade on? Some of those questions will help me out. Do you have a strategy? Yet? Have you experimented? Have you traded at all yet? Those questions. But initially, I will tell you, you're probably scared because of risk, right? Well, you wouldn't be scared to trade on a demo account. There's nothing scary about pressing a buy and sell button other than it says you lose, and maybe you feel bad because you were quote unquote wrong. But the first recommendation would just be hop on a demo account, man. Jump on a demo account, paper trade. They're free. You can find them from different brokers. You could use Trading Views, paper trading for free, and start experimenting there. Place buy and sell orders. Watch what happens. Get comfortable. Trade a system. Start developing your risk management. Start developing a full, all-encompassing trading plan. You're probably going to lose money, to start, fake money, which is good, and work through that. That's the non-financial advice recommendation, because as you can read from the description of this video, I'm not a financial advisor. Nothing I say is financial advice. I'm just an idiot on YouTube, man. Trading's risky. Most people lose money. You're probably going to lose all the money that you trade with. Everything I say here is for entertainment purposes only. What strategy do you recommend, man? I am a discretionary trader. I really don't have a strategy so much as I have an approach. I like to say that a lot. I trade a discretionary strategy that is based on market structure, price action, horizontal levels, whether you want to call them order blocks, support and resistance, supply and demand, and I mix in a little bit of volume and order flow through a number of different tools, but primarily raw market structure and price action. I mark my own horizontal levels. Most of them are discretionary. There's only a couple objective levels that I mark on my chart. Objective meaning it's definitive by data that you can see on your chart. It's not my opinion. It's a fact. When we say the high of yesterday, what was yesterday's high? That should be the same in the futures market on your chart as it is on my chart. So that's what I mean by only a couple objective levels. Other than that, it's what I described earlier in this video. Somebody asked the confluences I look for. I described marking my chart, doing my pre-market analysis, forming my frame of reference for the trading day, utilizing trend, utilizing where market structure is, looking for an ideal way to structure risk and get in the direction that price is moving, the direction of that trend, to capitalize on that. So that's what I would say, man. That's the strategy. No specific rules-based strategies. I don't like them. Man. Nothing too complicated. People overcomplicate trading. What strategy? Yeah, I'm watching BTC for 3 years, and I have traded a bit here and there. I'm watching gold versus USD and ETH using Blueberry Markets. Got you, man. Yeah, my recommendation for you, brother, I would say really is just what I was talking about. Get a demo account, where there's no money involved. Don't put any risk on, and start practicing, right? Like if you're going to go and do any kind of difficult thing, whatever it is, you're going to practice first. You're going to practice to make sure that you know what you're doing, that you have it down pat, that you know that you can do this when there's actually risk involved, and then you got to do the hard thing, and you got to do it where there's risk involved. But practice on demo, and you can trade, BTC if you want. You could trade crypto, you could trade gold, whatever you want to trade. Blueberry Markets, I think, is international, so that's fine. But yeah, trade on demo. See if Blueberry Markets has a demo account through that broker and whatever platform they use to trade with, and trade on demo, man. And just approach it from an experimental type of way. Just start practicing. See what works, what doesn't work. Don't try to do too much at one time. Maybe use a 1-to-1 risk to reward just to see, because we know if you're using a 1-to-1 risk to reward and you're flipping a coin, if you're not counting commissions and swaps and fees and spreads, you should be at a 50% win rate. If you're not and you're losing more, then somehow you're doing something even worse than just flipping a coin. like a random person pressing a button on an internet on a keyboard pressing buy and sell. So start there, try to get towards that break even level, and then make small improvements. That's kind of like a baseline way that I like to approach it. That's something that a lot of guys talk about. I think it's become more common to talk about that most guys are not break even. Most traders lose money, like high percentages, whatever the number is, 70, 80% of traders are losing money. And when you step back for a second and you say, how is that possible that almost all traders lose money if I can just press buy or sell randomly and have a one-to-one risk to reward, and taking away commissions and swaps and fees? Because yes, that all eats into it, and that would make you a losing trader. But if you take away from that, you should be really close to break even, doing no technical analysis, randomly, not with the trend, not a time of day, not a single markup on your chart. So if you start there, that I should be break even, the challenge of making money and trading profitably becomes less of this huge mountain. And you could say, okay, how do I just get to break even so I'm better than most traders, and then start to just make a little bit more when I win and a little bit less than when I lose, or maybe win a little bit more trades. Not all of my trades, not 90%, not a 10-to-1 risk to reward, just a little bit more when I win. That's how I approach it. About 5 years, brother. About 5 years in the markets. Again, starting with stocks, crypto, and then back over to Forex, really focusing, and now futures. Again, not for an enormous amount of time. Don't mind sharing that in the futures market. But to me, the transition has been pretty, easy. The newest thing that I'm messing with are these top step accounts. Challenging myself to be able to trade within these rules, trade on their platform here, on the Top Step X platform. That stuff is different, it changes. So, but that's what I believe is most wanted from other traders. That's what can help most guys. Most guys are trying these prop firm challenges. Most guys are not trading live accounts. They're trying to go through prop firms, and they have to work within these rules. They have to use approaches and strategies and risk management that makes sense to follow them. So that's what I'm working on here. What else we got, man? Good questions. Keep them coming. Oh, that's a big question, brother. XD, Unibout. I would say start with just the basic Googling of this stuff, and start reading about it. Some good sites that you can use would be like Investopedia. That's a general site. If you wanted to learn about how the Forex market moves and what the Forex market is in the most basic sense, baby pips. I'm not associated with any of these. And just start reading about these sites, reading about the futures markets, what a contract, how the whole thing works. Don't they act all the same? Very, very similarly. If we're looking at a technical analysis standpoint, and we're going to trade the 5-minute chart, right, on TradingView, the way you should be approaching it, in my opinion, because other people will tell you differently, in my opinion, is very, very similar, especially if you're trading the same instrument just in a different market. If you're trading a CFD of the NASDAQ, or you're trading a futures contract of the NASDAQ, especially then. Obviously, it's different if you're trading gold versus NZD, JPY, very different instruments there. But the trading from a technical analysis standpoint, if you're not using fundamentals, is very, very similar. So the transition is not difficult, in my opinion. If anything, there's more things that you can utilize in the futures market to your advantage, for sure. What else we got, guys? Give me your questions. I'll be happy to answer them. But again, I appreciate you guys being here. Appreciate you being in the live, in Discord. If you're in Discord, man. If you're not, hop on in, man. Don't know what you're doing. Best free futures trading Discord. Getting built. Quote me now. I'm gonna go back to all these videos in a few months and a few years when we got thousands and thousands of people in there, and all the guys from the beginning that were here with me are the OGs in the group. Let me see what we got coming into end of day here. Yeah, guys, I think I'm going to wrap it up here. Market's still trying to push up. Looked like it was going to react there from that zone, but it looks like it wants to push higher. No trade from this afternoon. Again, I don't want to apologize for not taking a trade, because sometimes not taking a trade is trading. I've had quite a few of these sessions where I haven't taken a trade, but there just isn't anything for me to trade. I would be I'd be taking a trade to be taking a trade. And usually doesn't work out too well if I'm trading outside of my approach or my strategy, and just kind of, just hoping. Hope is not a good strategy. So this wasn't it for me this afternoon, but a couple good questions. When do you usually trade, or when does the most volume come in? Yeah, man. 9:30 a.m. Eastern is NYSE Open. 9:30 a.m. Eastern for New York Stock Exchange Open. A lot of volume comes into the market during that time frame, and then towards the end of the day, like we have here for NYSE New York Stock Exchange close at 4 p.m. Last hour and a half of the day, last 2 hours of the day, you get a little bit of an uptick in volume. But I would watch those 2 times of day for sure. But other than that, guys, I appreciate you being here. Thank you. Hop in the free Discord. I would love to have you guys in the community, giving out as much for free as I possibly can. Thanks for being here. Again, if you got some value out of this, you like the video, help me out. Like the video, subscribe. If not, no pressure, man. Appreciate you. You don't have to hop in the Discord either. No pressure. That's the style that I'm going to go about this. So again, thanks for being here, guys. I'll be live again this week. Discord for the schedule. I'll announce it there. Keep you guys updated, and hopefully we'll get some trading in. Talk to you guys later. Thanks for being here. Good night, my guys. Good night.